Good morning, trading world. It is November 8th, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. There are a few things to consider this trading week as we go into election day and the bond holiday at the end of the week, which is Veterans Day. Before I get into trade talk, is anybody else suspicious about the Powerball lottery being pushed back? What is that about? Onward to the trade talks. It just baffles me. I was just okay, but like I said, onward with trade talk. Even with the election day this week, the most important event this week is CPI on Thursday at 8:30 a.m. We can tell this by looking at the market implied volatility throughout the week. Let me bring that up for us. And in order to do that, it is probably best done on something like SPX that has a daily expiration now, so that we can actually see what's going on. And I want to just focus on this week. We still have November 8th, 9th, 10th, and 11th, which is Friday. So if we just focus on those, all right, today we have a vol of 33. Wednesday, which election day results, if we had serious volatility, would actually fall on that day, but it doesn't. Then you have Thursday, which is the outlier, because its vol is almost 4 to 5 points higher than any other day this week. So Thursday, the only thing that happens on Thursday of interest is CPI. So just wanted to point that out. Also, I was hearing some talking heads kind of spread some half-truths about elections. There is research that states after the election, we usually rally regardless of what party wins. To go a little more in depth, the research is 85% of the time we do rally about 1%. You know, that's a 1% rise in the markets. But that rare time we don't is a drop of about 14%. So this year, I definitely wouldn't take the odds on that bet. And I'm hearing a lot of talking heads kind of bring this up kind of off the cuff. But this is how people get in trouble. Like we often hear when you first introduced to trading and you're introduced of selling premium, you're often introduced to this world of, oh, I can put together trades that have a 90% probability of winning, which is true. And then once you learn the system and you get into it and you start to do it, it's that one time, because the market is really bad about doing this, where it lets you build confidence in doing something, where you stack more and more of your money into a particular strategy, and you get comfortable with it. You get so comfortable with it that you put way more money or risk into a position than you ever should. And the one time, or it may let you get away with it a couple times. But when you stack so much money into that position, the market is bad about that 10% probability. That one time is the time that you wipe or lose everything that you made all those other 90% times that you were right. So it just had me thinking about this with the election. A lot of people trying to stack positions or okay with being bullish right now. And this is why I end every video with, your most important job as a trader is to protect the capital that you already have. And we do that by knowing and understanding risk that we have on in each position and managing that risk in accordance to our account size. That is so important as a trader. That is more important than getting the direction right, getting the trade logic right. It is the most important thing as a trader. And it made me cringe when I keep hearing, talking heads kind of spew half truths and, just certain things that they talk about, and it gets people caught up the wrong way. All right. In the last few weeks, I've spoken about bonds having a reversal soon. Let me bring up a chart with the bonds. We'll use the ZN. It's the 10-year bond this time. And what I would like to go through is, let's look at it on the daily time frame. On the daily time frame, something that you can kind of see clearly is that we do have a divergence, or heading into some type of divergence. I know in the past few weeks I've spoke about bonds having a reversal soon, and that reversal will greatly affect the equity markets at some point. We're getting closer to that point. Looking for a double bottom to go with the bullish divergence in bonds. And you can kind of see that we're kind of prime, or possibly making that bullish divergence here. You can kind of see a low here and a higher low there. And even at the lowest low here on the indicator, the MACD, we had a lower low back here. So it's starting to form a divergence, a bullish divergence. So I'm looking for that double bottom to kind of form, to go along with that bullish divergence. And we have a bond holiday coming up at the end of this week. And I think that bond holiday may kind of hide that kick to where there's a big gap out of nowhere, taking people by surprise and blindsiding the market into a panic move down, because bonds kicks off on that reversal, kind of out of sight, out of mind. So that's one of the things that I will be keeping eyes on this week and next week that's really important to me. Next, be wary of the VIX. As we have seen some shrinkage in the VIX and traders start to think all is well, it is not. We come down a good deal on the VIX, but we are still at a 25 level on the VIX. This is still crazy. It may not be dive, duck, dodge territory, but it is still you better duck territory. I am likely to put on some more VIX call spreads somewhere around here with a lot of time on them. Looking at maybe this 20, maybe 24. Hopefully we get down to the 23 level, but you never put on all your position or enter into all your positions at once. So at the height of today, I may put on a position or two, and then at the end of the week, Friday, we'll see how we're looking, and we may get a chance to put on some more when it comes to the VIX. And just to kind of go back and look at the VIX on the chart, it's a pretty interesting take. And for those of you wondering what all this scribble is on the chart, this is the reverse engineering MACD and the MACD with prices, just so that I can kind of get a better look at risk. And what the reverse engineering MACD does, it does a great job of telling you what the risks are. If we completely flip positions of where we are on the MACD now, this line right here on the reverse engineering MACD at the 41 on the VIX kind of tells us where we would end up at the complete reverse levels on the MACD. So that's why I kind of like it. Using that view every once in a while to kind of get me, kind of get ahead of the road, to kind of see if things kind of lined up technically with other things that I do. It's kind of confirmation. So that's what I'm looking at on the VIX. So again, I'm looking or thinking of doing some out of the money call spreads. Probably in the $5 and $10 variety, encompassing up here toward that 40 level. So that's pretty much what I wanted to talk about for the morning. Let's get to the key levels to watch for today. All right, here we are with the key levels of the day. Starting on the resistance side, our jack resistance is 381 to the 382 level. It will hold a lot of weight trying to break through, but persistence beats resistance. We've been here before, so it may be time to break through it. The queen resistance is 383 to the 384 area. And then we have our king resistance, 385 to the 389 level. On the support side, we have our jack support at 379 to the 378 area. Queen support is 377 to the 375 area. And then king support is 374 to the 368 area. The main thesis for today is bullish, closing above the 379.95 with a projected target high of between 381 and 389. The alternate thesis is bearish, closing below the 379.95 with a projected target low of between 379 and 376. The current major channel we are in is 379 all the way down to the 364 area. But once we open, we will firmly open up in the next channel above, which is 379 up to the 397 area. We do have harmony between the technical side, which is bullish, and the quant side, which is bullish. So we still have some order flow way up the ladder to go get at some point. This brings us into the scenarios of the day. All right, our first scenario is going to be our expanded range day type structure. We could have an initial pop higher, find resistance, and chop back and forth or sputter around the queen resistance before getting a mile or late push back up toward the end of the day. So this is our expanded range day, which means at some point we're going to cross below that previous close below it, and then of course close above it. So again, that's our expanded range day structure. Let's get to the next scenario. All right, our next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area, find midday chopper on either the Queen or King resistance before going back down with the same energy or force we went up with the first part of the day. So again, that's our rounded reversal day type structure. Also, be a little wary of the vice versa alert, where we could get this opposite scenario playing out, where we get a continued push lower first. We get that continued push lower, which would look like this: lower first, midday chop around either the Jack or Queen support area, and then a push back up the second part of the day with the same amount of force we came down with the first part of the day. And let's get to the last scenario. Our last scenario is our trend day up. We can open gap up away from the previous close represented by the blue line. And we start with a fade back toward that previous close. We find support on or before that previous close, then begin the uptrend for the day, better known as our golden window, the best time to trade. We usually reach a midday chop, which could be around either the Jack or Queen resistance area. We could get a head fake to start the second part of the day, looking to continue the main trend for the morning, and then not all the time, but quite often we do get a fade on an uptrend day going back in toward the close. So those are the scenarios that I'll be preparing for today. Again, as I said it before, the most important job as a trader is to protect the capital that you already have. And we do that by knowing and understanding the risk that we have on in each position. And we manage that risk in accordance to our account size. I just want to kind of say, because I know I'm not the only one struggling with this, because I depend on market internals quite a lot. Thinkorswim has botched yet another useful aspect of the platform where market internals have not worked for pretty much the past 2 days. But this may not be a Thinkorswim issue, because I think on another platform I did try Tasty for a bit and it looked a little bit out of sorts, but I don't have the same setup on Tasty as I do with Thinkorswim, and I didn't have time to kind of go through and put everything in place. But Thinkorswim, I just wish y'all get it together, because this is, it's killing me. I love the platform. I love all the analytic stuff that you're able to do. No one is better when it comes to that stuff, but execution suffers a whole lot. And I have been looking, or I do have accounts at other places that execute a lot better. But I just had to just say that I'm hoping that they get it right with the market internals. If you're not sure what internals are, it encompasses things like tick. So just wanted to say that. As always, I hope this helps. And let's make today a positive trading day. Let's go out and have a great one.